Hi, this is Greg. Welcome to the channel. Well, it finally happened. Oil finally broke $100 a barrel. And in fact, today it hit $112 a barrel. Now, I have been predicting on this channel for over a year that this was going to happen. It finally happened. So the natural question for all of us is, where do we go from here? Okay, so there's been a lot of unbelievable things going on in the world, all of which support strong energy demand and energy prices. I have been recommending, of course, the integrated oil companies on this channel for about a year and a half. I originally went in and recommended Exxon at $33 a share when it was severely depressed due to the pandemic. It's had an enormous upswing since then. It's been rallying for most of the last year and a half. Exxon Mobil, for example, has gone from $56 a share to $81 a share in the last year. Chevron has gone from $101 a share to $154 a share in that 1 year period. That's a 52% increase. Exxon increased about 48%. So it's been a fantastic year to be in energy stocks, and I went in big. It really makes sense at this point in time to really pause. And even though it's worked out tremendously since we've been in these stocks, the real question is, where do we go from here, and does it still make sense to have a relatively large exposure to oil and gas? So in this video, I'm going to go through 4 reasons why I think there is still a bullish case for oil and gas. So here we go right now. First is, the most obvious point is the geopolitical situation. With Russia invading Ukraine, it has created a situation where the oil and gas business has been put into severe turmoil. So far, Europe and the United States have left out Russian oil and gas from their sanctions, which have been very punitive to Russia. I believe that it's just a matter of time before political pressure and other pressures will come upon the U.S. government and also Europe, and they will eventually add sanctions to Russian oil. Even without doing this, many players and many countries in and around Europe and in other countries are already not touching Russian oil. It's considered toxic. So with or without the sanctions, there's still a tremendous amount of pressure to not purchase Russian oil and gas. Now, this is a problem because Russia provides the United States, for example, with over 800,000 barrels per day of oil and other petroleum products. And on a worldwide basis, they are the 3rd largest supplier of oil and gas behind the United States and Saudi Arabia. Russia provides approximately 10% of the world oil supply. What this equates to is Russia exports more than 4.7 million barrels per day of crude oil and other oil equivalents. The second factor is the worldwide economy is still growing relatively rapidly. Now, this could change, but presently the U.S. is experiencing very strong growth following the pandemic, and Europe and other areas of the world are also experiencing extreme growth. That is going to cause continued very strong demand for oil, and particularly oil and gas. Third fundamental factor that'll support strong oil prices is the political situation. Now, it's no secret that the Biden administration in the United States has declared an all-out war on oil and gas and the oil and gas business. They've been pushing the Green New Deal and doing everything they possibly can to inhibit U.S. producers, which are some of the strongest in the world, from drilling and from investing in new supply. In fact, Chevron has said that all Biden would have to do to lower crude prices is simply support U.S. oil production. This is a very simple thing, but I don't know if these imbeciles in Washington are actually going to do anything, or if they're just going to continue the way they are going now. They seem to be philosophically just opposed to supporting the U.S. oil business. While I think this is terrible for the country, terrible for the world, and it's really, since we continue to buy Russian oil, we're basically contributing to the financing of the Ukraine invasion. Even though none of this makes sense, I can't explain it. I don't see the Biden administration, for political reasons, changing their course. And the fourth and related issue is overall underinvestment in exploration. Again, because of politics, and it's not just in the United States, there's this green push also infects, so to speak, the European Union. There is just an environment right now where it makes more sense for these companies to underinvest in exploration, and with the termination of the XL pipeline and the prohibition of leasing on government lands, this trend seems to be continuing, and until something radically changes, we're just going to have very strong price support under the oil and gas business. A number of financial institutions have come out with varying projections as to where oil could go to. My personal feeling is that unless something dramatically changes in the political environment, which I don't expect, and if this horrible war in Ukraine continues, I see oil in the near future going to $150 a barrel. So for all the reasons that I expressed in this video, I think there are very strong underpinnings to the price of oil and gas, and I think that this trend is going to continue for the foreseeable future. Now, having said that, I have to say that at some point, between the high oil prices, the high energy prices, and the massively high inflation, which at the last print CPI was 7.5%, eventually, I believe that combined with rising interest rates, which are going to be implemented by the Fed to quell the extremely high inflation, I think eventually this is going to soften the economy and cause a recession. When those recessionary pressures begin to take hold, I think we're going to have to reevaluate our view on the future of oil and gas. I still believe that integrated oil companies like Exxon and Chevron are tremendous companies to invest in. It's not just about the absolute price of oil, because oil goes up and down and up and down. I think they're very well managed companies at this point. They have rationalized their cost structures. They are pulling out of their relationships with Russia. And I think that, even over the long term, these companies are good bets. They pay excellent dividends. And unless there is a tremendous softening in the economy and oil prices go down materially, I would continue to recommend them as investments. Well, I hope you got value out of this video. If you did, please subscribe and like and hit the bell. Love to have you on board as a subscriber. On this channel, we talk about the markets, we talk about economics, and we talk about investing. And I make specific stock investments, but I also talk about the macro picture. And the sole purpose of this channel is to make you a better and richer investor. Thanks, and for now, it's Greg out.